Welcome back, folks, to another episode of Road to a Million Weekly Update for the week ending December 7th, 2024, where we diagnose the currency markets, prescribe some insights, and occasionally throw in a bit of sarcasm for good measure. Now, this past week, oh boy, it felt like the markets were in one of those awkward silences at a family dinner. You know something's about to happen, but no one's willing to say it out loud yet. The US dollar barely moved, despite some juicy headlines. France had a political meltdown, Trump threw out another tariff threat, and even the Non-Farm Payrolls report couldn't shake things up. So what's the deal? Let's dive in. All right, let's start with the US dollar, the star of the show that refused to perform. So here's the setup. November's job report came out swinging. Non-farm payrolls crushed expectations at 227,000 jobs added, plus they went back and upgraded the last 2 months by another 56,000. Sounds like dollar fireworks, right? Wrong. Because here's the twist. The unemployment rate ticked up to 4.2%. Add a tiny dip in participation, and suddenly the report went from wow to meh. It's like baking the perfect cake, but forgetting the frosting. Sweet, but not satisfying. And then there's the market's reaction. Dollar bulls looked at the report and said, we'll hold our ground. Bears? They shrugged too. Euro USD stayed glued to that 1.06 level, while USD JPY dipped back below 150 like it was testing the waters. The dollar's vibe right now? Resilient, but not inspired. It's like it's waiting for someone to kickstart the party. Spoiler alert, that someone might just be next week's CPI report. Now, let's talk about France. You'd think a government collapse would shake the euro, right? I mean, Marine Le Pen's throwing political haymakers, threatening to knock down the whole fiscal plan. French-German bond spreads spiked early in the week, and everyone held their breath. But guess what? By Friday, spreads tightened right back up. The euro barely flinched. It's like the markets collectively said, it's France, they'll figure it out. And, just to add some flair, rumours are swirling about Europe dropping a massive €500 billion defence spending package. $500 billion, folks. Nothing makes markets more forgiving than the promise of government-backed cash. The euro found its footing, not because of stability, but because, well, there's always a new fiscal lifeline in Europe. So, long story short, France collapsed, but the euro stood tall. Go figure. Now, the real show? It's coming this week, as 9 out of 10 G10 central banks are about to take the stage. This is the financial version of a reality show. Who's hawkish, who's dovish, who's just here for the drama? The RBA kicks things off on Tuesday. After a rough GDP report, people are asking, will they blink? AUD-USD is hovering near 64 cents, and traders are waiting to see if they hold their hawkish tone or cave to the pressure. My money? They might soften things up just a smidge, but not enough to throw in the towel. Then, midweek, we've got the Bank of Canada. Now, this one's spicy. The market split down the middle, 25 basis points or 50. Personally, I'm leaning toward 50. Canada's been holding its cards close, but this could be their moment to shock everyone. And of course, Thursday is the big one. The ECB and the SNB. The European Central Bank is almost certainly going for a 25 basis point cut, but all eyes are on Lagarde's presser. Can she thread the needle between optimism and not spooking the euro further? As for the SNB, well, if you're betting on predictability in Switzerland, good luck. They've been full of surprises lately, and I wouldn't rule out a curveball. So what's the vibe heading into next week? Consolidation, folks. That's the word of the moment. The dollar isn't ready to make big moves until it sees what CPI has to say. The euro's holding its ground despite the chaos in France and central banks. They're about to drop a week's worth of headlines for us to chew on. But here's the kicker. This consolidation? It's not going to last forever. Markets are like rubber bands. The longer they stay stretched in one place, the bigger the snap when they finally let loose. So whether it's CPI, the ECB, or some geopolitical curveball, something's going to break this calm. And when it does, you'll want to be ready. That's it for this week, folks. The calm before the storm. Tune in next time as we dissect the fallout from next week's central bank circus and maybe, just maybe, figure out where this market is heading into year-end. Until then, keep your eyes on the charts and your trades sharp. I'm George, signing off. See you next time.